Welcome, traders, to my channel. In today's video, I'm excited to introduce an indicator developed by the renowned trader David Stendahl. Known for his expertise in the financial markets, Stendahl's indicator offers a unique approach to analyzing trades. I'll explain how this indicator works, its key features, and how it can enhance your trading strategy. Stay tuned to see how this tool can help you make more informed trading decisions and potentially improve your trading outcomes. We will delve into the details of this indicator and review the reference written by David Stendahl in April 2000. David Stendahl is an internationally recognized speaker and author of 4 books covering various aspects of trading. This indicator is used in the triple exponential moving average calculation to reduce the delay compared to the original moving average. TEMA is a faster moving average than traditional moving averages. When the fast average crosses from bottom to top with the slow average, it can be considered a buy signal. When the fast average crosses from top to bottom with the slow average, it can be considered a sell signal. Now let's see how we will trade with this indicator. Let's start the video. We will search in the search box for Zero Lag TEMA, locks. We will change the settings by clicking on the inputs. We will change fast period to 70 and slow period to 140. Now let's see when TEMA gives us an entry signal. We have a buy signal, so the stop loss will be placed below the nearest low. In every trade you make, look for the nearest low. So this is the right place to put the stop loss. This helps ensure that your stop loss is strategically placed to minimize potential losses, while allowing the trade enough room to move in your favor. Next, let's look at an example on the chart to see how this strategy works in real time. We'll analyze a recent trade and observe how the indicator provided entry and exit signals. This practical demonstration will help you better understand how to apply these principles in your own trading. The price reached the target. Here we have a sell signal. Stop loss will be placed above the nearest high. Make sure to update your stop loss based on new price movements to protect your profits and minimize risks. If the price moves significantly in your trade's direction, it might be best to adjust the stop loss to trail the moving price, helping to secure your gains. The price reached the target. Now, let's move on to the next part of the video, where we'll explore how to use the indicator in different scenarios. One thing to consider is choosing a profitable trade. Let me give you a simple test here. We have 2 trades. The first is to sell and stop loss at the nearest high. The second option is to buy and place a stop loss at the nearest low. Let's assume the 2 trades are in different pairs and at the same time, one in Bitcoin and the other in gold. You want to take just one trade. Which trade do you see as more profitable? Now pause the video and choose the right trade, gold or Bitcoin. If you choose the gold trade, your answer is wrong, because the trade that will give you the highest return is the Bitcoin trade. The rule is that the higher the risk, the greater the profit. If you enter a gold trade, first, it will take longer to reach the target. Second, your risk-to-reward ratio is 1.2, which is less than the profit of a Bitcoin trade. Third, the longer the period, the more likely the price will bounce back to the entry point. In Bitcoin trading, first, the trade took a short time to reach the target. Second, the risk-to-reward ratio is 1.3, so the profit ratio is higher. Third, the price bounce rate decreased. This indicator was first described by David Stendahl in the April 2000 issue of Technical Analysis of stocks and commodities. David Stendahl is the founder and president of Signal Trading Group. He has over 20 years of experience designing trading systems based on trends, patterns, and momentum. As a commodity trading manager, CTA, he has traded 40 futures markets across 8 different sectors. Additionally, he has developed several financial software programs focusing on trading system evaluation, position sizing applications, and portfolio construction. If you are interested, you will find the interview link in the description box.
This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. So today on the show, I have Dave Stendahl. Thanks for joining today. I appreciate it.
Mike, thanks very much for having me. I appreciate it.
So let me just, as a little bit of background. So when I first got started trying to figure things out, I, like a lot of people, was probably going through either Futures Magazine or technical analysis of stocks and commodities. And I would look through, and usually the most interesting thing were the small ads.
Those were some, 3-day seminars, basically me just talking, about lots of different subjects, but things haven't really changed that much. But, those were some interesting times with the development of the software and just trying to find new ways in which you can evaluate different trading systems, and really had a great time learning just as much, from the people that I spoke to at those seminars, what it is that, their concerns were, what, specifically the different types of systems that they were trading as well. So I got just as much out of those seminars as I think everybody else did. So those were good times.
If you are new to our YouTube channel, then please subscribe our channel. Thank you for watching our video. See you in the next video.